Good morning, ladies and gentlemen. My name is Adam Davis, and welcome to episode 108 of the FinTech Insider Breakfast Show. As you know, in this show, we bring you the best and the brightest from FinTech from around the world, around the banking landscape, straight to your homes every day from 8:30 BST, apart from on Mondays and Wednesdays when we go live at 3:30 BST or 10:30 a.m. ET for our US friends. And both shows, as we know, are live right here on LinkedIn. Today's topic is the BCR Fund Pool E. So the winners were announced on Tuesday, the 18th, so just early on this week, with 5 million and 2.5 million grants awarded to 6 fintech companies. And today we're pleased to be joined by the CEO of one of those winning fintech companies, Hassan Kasai from Onfida. Hassan, how are you doing?
Very well. It's good to be on.
Yeah, it's good to have you here. If you've recovered from the hangover,
More or less, just about.
Just about. Awesome. Look, as ever, please get your comments in, get your questions in, leave them in the sidebar, and we'll answer them as soon as they come in on the show. So first up, before we just get into sort of the thick of it with regards to the bid, do you want to just give a little bit of a background to yourself and also to Onfida?
By all means. So I started the company with 2 co-founders back in 2012, 8 years ago. And we saw that businesses are moving online, but they don't have a way of verifying that their customers, the people that they're registering, are who they claim to be. So we used a government ID and facial biometric approach to onboard them, and powering it is our machine learning capabilities. And so we power the majority of the fintech community, 4 of the 5 mainstream banks here in the UK, and we are a team of just over 400 people.
Cool. And we know you guys well. We've used you as well. Let's talk a little bit about the BCR Series E funding. So I'm just going to start off with some stats that I've been helpfully given. So the BCR said that they received 92 applications from 67 applicants in the initial stages of the Pool E bid. They handed out, obviously, as I say, £20 million this week. There's a total 100 million pool. So there's another 80 million to be given, and that's probably going to be happening, I think, third week of September. All successful applicants, both from the 20 million pounds that's just been given and also the 80 million, need to deliver on their business propositions by December 2022. And we'll talk about that in a little bit. And this really came about because of what happened with Metro and what happened with Nationwide, when they actually gave back the money that they were awarded as part of the earlier submissions, which was, I think, last summer, actually. And they cited the fact that they needed to change their business direction in light of COVID and other things. So the money was reinvested, and obviously that enabled more fintechs to come and bid for those pools. So I guess from your perspective, well, first of all, like, what does this mean for Onfida? Because it's a great sum of money that you know is essentially a slight. Do you see it as a freebie, or is this like is this kind of something which you've been planned in?
So we had applied in previous years, and for us, it's the identity infrastructure is broken and getting worse, and that businesses, SMEs in particular, as they're registering for accounts, whether predominantly financial service accounts, the infrastructure that you are able to do that is quite outdated. It's usually paper-based. You have to go and have face-to-face interactions often, and in an increasingly remote working world, given COVID-19, that's just becoming less practical. So what we had presented in previous applications, we showed that we're working on this and we're making progress, but that this grant will help us accelerate those. So I think given over the number of years, we've been able to show not just the progress that we're making, but been able to commit to accelerating that significantly and help bring the benefits to the SME community faster. That played a role in helping us be awarded with this. So is it seen as a freebie? Not quite, but because we're committed to investing, matching this and increasing actually the overall commitment. But it is very much us being able to achieve what we wanted to in a much shorter time span, hopefully a couple of years as opposed to it taking about 4 years.
Cool. Yeah, I was going to just ask you about the commitments that you've made, because a lot of the winners in previously and in this year's have got their own commitments that, as you just said, they'd either match the money that they received, and they've got other sort of public commitments that they've made as a sort of stipulations to receiving this money. Is there anything you've just said you match the money, but is there anything else that that's worth calling out from sort of the pledges that you've made?
Yeah, so I like the fact that these are public pledges. And so the first thing is to say is that we essentially, we're a B2B business, and the businesses that use us, financial services like a neobank or remittance platform, they are onboarding individuals and people. So this is unique insofar as it's now helping SMEs gain access to services. It's still people within those SMEs, directors and so on, but that is what is sort of different as a sort of separate project. We made a number of commitments. One is around the number of businesses we're looking to help enable much more straightforward, faster, and access to these services. Anyone who's listening to this, and they'll remember when they registered for the first bank account as a business owner, how long that process typically takes and how much friction there is.
Yeah.
And typically, if you're sort of expanding to other countries, or you've set up in, be it France or Germany, and you're trying to set up in the UK, it can take months. And in this sort of landscape where it's all about speed, that is a bit too much. So there's a co-investment commitment of what we will be investing ourselves. There's a cost saving that we'll be able to deliver to the financial services community. We're putting that at over £100 million. So it's a £5 million grant that we've been given. We're going to invest just over £5 million ourselves. So essentially a £10 million investment and a commitment of reducing overall costs by 100 million over the next 2 years. There's increasing usage, better fraud detection to stop fraudsters, and other things around diversity and inclusion that have been included as well.
Yeah, I was going to say. I mean, I'm relatively au fait with the small business onboarding, that journey. Where, when you started out, I guess, where did you see the biggest pain points? Because for me, it was always around, multiple assignees and dignitaries, and you'd have to get this one to sign up and that one to sign up, and you'd have to get your structures right, and it was very, very difficult just to get everybody, if you like, I suppose. Everybody invested in one process, from sort of disparate people from around your company. So I guess, like, from your perspective, when you started, what was the biggest pain point that you were looking to overcome? Was it just this just takes ages because there's so many people involved in setting up a business for SMEs, or was it something maybe slightly more technical?
It's just outdated processes, and so I experienced it firsthand while I was at university. So I set up 2 student societies, and I essentially took over 2 others over my sort of period of studies. And the last student society I was involved with was the Oxford Entrepreneur Society. So me applying to become a signatory on that account, it took the full year. And by the time I was given a signature, I remember I had to get the next sort of student to sign on. And then setting up on Fido and getting a bank account and so on. So I went through the experience firsthand, and you hear it's kind of commonplace, as you know, in our community. We kind of know how hard it is. We pride ourselves as a fintech community. We've achieved a lot, but it's still some of the basic things as a new business looking to create an account for a number of different financial services. It's not just opening a bank account, it's borrowing money, remittance, and so on as well. And naturally, if you want to digitize the economy, and if you want to make it easy for an SME to switch or to have 2 accounts or so on, if it's such a cumbersome and time-consuming and costly process, then you're not likely to have a vibrant, competitive, and innovative market. So to your question, yes, I experienced it both firsthand, and secondly, this is to make it all as seamless as possible. So we've delivered that in large part to the individuals, so that individuals can now, within 5 minutes, can sign up to a number of different accounts. We want to deliver the same thing, but make it as easy for SMEs to be able to do the same.
Yeah, and I mean, it seems at the moment, whenever we're designing an SMB proposition, you guys are kind of like just our default. You've become like when somebody says like, "Well, Monzo you," it just means you're transferring money. Whenever we talk about SMB propositions, we're just like, "Yeah, let's on Fido it," which means we'll just get you guys in to sort out our onboarding. How do you feel that you serve at the moment, or do you feel the pressures, I guess, of serving, quite a vast array of the SMB community here in the UK from a fintech perspective, at least? And I guess, you've said you're only a few years old as a company yourselves, but what's that sort of growth been to actually, and the scale that you've needed to go through to actually serve, what is an abundance of fintech companies that now rely on your services?
So we were very much at the outset, we developed with the fintech community in a very close partnership. At first, with some of the neobanks, and then the rest of the community, remittance and payments and others being the key ones. When it came to, I guess, from the outset, our proposition was aligned in that it's all about the customer experience. And that is so technology being used in financial services is not new. It goes back to the ATM before that, right? But it's, as you know well, it's the customer experience first. So for us, it's just focusing on that and making it as smooth and user-friendly journey as possible, just matched quite well with the propositions that our sort of partners and customers were also focusing on. But the other considerations, as well as just the best experience possible and improving, it's focusing on helping as many people sign up to services as possible. So, a fair chunk of the financial service community are serving the underbanked or unbanked and those who have not been able to gain access to services in the past, who may not be on credit bureaus, they may not have access to a physical bank branch to go into. And so access is another key part of it. And the third component, as you imagine, is fraud. We are unique in that as a community, we're predominantly online with no physical branches. So that makes it a sweet spot for fraudsters to come in. And when you develop a solution whereby machine learning is at the core of it, so that as different businesses experience fraud, the machine learning models that sit in the middle learn and prevent those attacks for others in the community. That grows and helps and sort of develops. So I'd say we're very fortunate and very lucky that we're partnering with so many incredible high-skill, high-growing, fast-growing businesses. But in part, it was intentional in that we geared towards perfecting and focusing proactively on the financial service community. And a quarter of our business now is actually non-financial services. But the focus has been the collaboration, design teams, user flows, and everything else that goes with it has always been geared towards the financial service community.
Cool. Okay. Just a quick one of just going back to the BCR bid, because I'm kind of interested to know what your take is in terms of the amount of, let's say, reporting and commitments that you've had to make. Not the public commitments. I'm just talking about showcasing progress to the BCR. Do you? I know there's sort of been a lot of discussions this year because of COVID around whether the initial set of requirements or milestones, if you like, that companies signed up to last year was still valid just because of what's happened. Have you had to, did you take that into consideration when you put your plans together? Because we've got this sort of December 2022 date that, your business proposals have in theory got to be there or got to be established. But what does that actually mean sort of tangibly to you guys in terms of, the application that you made?
So it was a pretty detailed process as far as, so a lot of this we'd already written about and shared proposals previously, and we'd started making limited progress, but we had much more data and traction around the projects such as this, and these projects we're doing with partners. So equally partners have made progress. So that helped to show there's more data, there's more sort of a traction to go by. The second thing is that it's a pretty thorough job in that our models were reviewed in quite a lot of detail. The assumptions in particular were reviewed, and there were questions and quite a few back and forths around, is this too much? Is this too ambitious? Is it not? And how would you get to this? Or is this, and so on. That helped. And equally, I think it's great that of those who were awarded last time, the fact that they're given the money back shows that, that the feet is being held to the fire to some extent, and that if you're not able to deliver, you've made these public commitments, say so and help repurpose that funds for other sort of companies, which is what is happening now. And that again goes to show that this is government money, and therefore there's an extra responsibility on this actually to deliver. And we certainly feel that responsibility, and I'm almost sure that every other organization that has won or been granted this award feels the same. So that makes it even more important to actually deliver on this. But your question around the process, it was a pretty thorough one.
Cool. I mean, yeah, it's. I mean, I suppose for Nationwide, especially to receive that kind of that money, the pressure was always on, I guess, from an industry perspective to see how and when they could deliver. But it is an interesting and quite a transparent insight into sort of the inner workings of big programs when you get, when these programs, I mean, regardless of whether it was government money or not, but let's just assume it was internally funded, sort of the success of those programs and how they work and how they operate. Just a quick one also on the competition, I guess, or just the SME industry in the UK, because what the BCR bid is going to do, of course, is bring a whole raft of new fintechs, additional scaled capability to compete in the UK. Now, it was always always considered, I guess, an underfunded market, I suppose, going back, let's say, 4 or 5 years before sort of the neo wave came in. But I think, like now, do you see, in 2 years' time, when some of these propositions, when some of the niche propositions, and then some of the sort of the neo banks that concentrate on SME banking sort of really come to fruition, do you see like the UK being, like, I suppose, the leading light, if you like, for SME banking around the world? And then how quickly, I suppose, can we take that product and actually expand it overseas?
I think it definitely has the potential to be. So in many ways, it's leading now because on consumers getting access to financial services, innovative ones. in a protected and regulated environment. And it's not just the fintechs that are doing a lot of work on this. It's actually the regulatory framework that underpins this, the collaborative framework more broadly, and the reg techs that are powering all of it. So that is all very much the case. And the question around these organizations looking to be innovative, you have an issue whereby the very large organizations, historically, purely because of the way that they're structured, innovation can take longer to come through. And as you know, these are ambitious timelines, but they are established, more experienced, and have already a larger distribution set. So as and when they innovate, it impacts more people. And on the other end of the spectrum, startups are by definition agile, move faster, are able to be more innovative. But would they be able to absorb this sort of size of awards and deliver on the commitments? Do they have enough experience, traction, and so on and so forth? So there's always that trade-off. And I know that we've spoken on your program previously, where banks have significant funding. Like, should they be given more to innovate? That's a fair point. But it's always this trade-off of, are they more likely to deliver innovation or not, given their experience, versus are the much earlier stage startups, by their definition, more hungry, more able to, and so on and so forth. So it's good to see a mix of both the large ones and the small ones, and the scale-ups in the middle that can bring that innovative DNA, and yet are large enough to be able to, whether it's match funding or commit resources to actually delivering on it, all that plays a role. And I would also say that innovation is never easy, it's never guaranteed, and there's always risks associated with it. So I know program's ever perfect, and that there's always room for improvement. But broadly speaking, we're really lucky to be, I suppose, as an ecosystem, one where we're surrounded by this sort of support, because it is unique globally. And it's incumbent on all those who have been awarded it to make it such a success, so that it's repeated, for whether it's funded by banks or the government or otherwise, so it's repeated for future cohorts.
Yeah, I love that point around scale-ups versus startups versus incumbents, because you guys, I mean, would you consider yourself a scale-up now? I suppose 400, you're getting kind of big.
At this point, I'd say more scale-up now. Yeah.
Yeah. But it's a cool place to be. I think you've I do agree. If I was sitting there and sort of handing out the BCR money, I'd get slightly nervous if it was a very, very new company. And then, if you're looking at the banks, you're sort of giving, there's a choice there which is relatively obvious. But a scale up actually gives you sort of the best of both worlds. So like in terms of, but I suppose, again, going back to that scale up perspective, how do you feel that you, or how big, I suppose, do you think that you guys can get? Because you're 400 people now. How many markets do you say? Are you in the UK, Europe, and?
So we are actually correct. So we have clients, businesses registered in 64 countries.
Oh wow!
We're headquartered in 64 countries, and the US is actually our largest market and fastest growing one. But as far as our key focuses, where we have a physical presence, is across 9 offices.
Well, okay, so fine. So yeah, so you're global now. I suppose in terms of what that scale journey might look like, how big, I guess, do you feel Onfido could go? I mean, and I'm talking sort of both headcount, but then also sort of geographic footprint.
So we think the next big company is going to be an identity company, and we're sort of gunning to be that. But when it comes to how big is this space, it most definitely is an advantage to be headquartered in the UK. And that is because it is seen as a financial leader. And so as we go into whether it's Singapore or the States or now increasingly Latin America, they want that UK experience. They want to not just learn about the offerings that we have or our partners do, but also more about the regulatory landscape, the incredible work that the FCA does, what these regulatory sandboxes do, what they achieve, and so on and so forth. And so it's actually increasing a competitive advantage to be part of this ecosystem. And as far as how big you can get, as much as we talk about the fintech community, as great as the progress is, we're only just about touching the surface. We're only like 1 to 3% of the financial ecosystem more broadly. Like, it is a giant industry. And the scale and the pace of innovation is pretty significant. So in our personal, I suppose, experience, we think that only 1% of the market has come to fruition. 99% is yet to come. And that's why there's a lot of room and scope for, whether it's grants or investor money or otherwise, for to be deployed in digitizing this whole experience and bringing financial services to the 21st century for the whole world.
Yeah, and just quickly picking up on a point of what you said beforehand, which is around identity is going to be the new big, or the biggest opportunity space. I suppose where from a product perspective, if you're looking at how people, either businesses or just individuals, interact with an identity company, are you sort of referring there to potentially sort of I don't know, the gatekeeper or holder of your consents, in sort of the world of open banking, or are you looking at somebody like a third party who is essentially the gatekeeper for all your, and trusted gatekeeper, I should say, for all sort of your passwords and whatever else, but sort of in a very seamless product, I guess, in a very user-friendly product. Where when you say identity is going to be the next sort of the next big thing, if you like, where do you see that industry going, and how can it serve its customers?
So as far as the actual the vision, essentially, it is less about there being gatekeepers. We mostly see that as being the problem, in that those who, it's actually individuals who have very little, businesses have relatively little control over their identity. It's usually centralized databases that log those. And then you have a whole host of issues that come with that. So we want to reverse this trend. We want to decentralize it so that it's actually the individual themselves that own and control their legal identity and provision access to all those that they want to. So that's the paradigm shift. That's what we're working towards. And when it comes to the way you could see parallels is that in many ways, Facebook has standardized the way you share your social identity, and LinkedIn has standardized the way you signal your professional identity. Our focus is to standardize the way everyone is able to prove their legal identity, your date of birth, name, and address, so that you can consume financial services. But it's to do so with a privacy-conscious and privacy-first way, so that no private business or government has access to your personal data.
Right, got it. Look, we're coming ready to. We've just got a question in from Moishin Rajani. Thanks very much. He works for changeahead.org.uk, and he's asked how can the vulnerable and sort of trained volunteers as a business, can you guys onboard, I suppose, charities and businesses that have been set up specifically to I suppose not for sort of profit interest, obviously, but I suppose how far is the reach of Onfido, and can it onboard sort of charitable initiatives?
So the answer is yes. So we, as it stands, we power businesses that would onboard a charity, for example. But the initiatives that we focus on to help vulnerable communities, there's one around racial bias, and we've developed a program as part of the Information Commissioner's Office's first privacy sandbox, where we targeted and focus on improving the accuracy, specifically on darker skin consumers. So that is an initiative that is targeted at sort of an underrepresented community. We've done a lot of work around accessibility. So if you're partially sighted or have some sort of disability, you're still able to gain access. Voice becomes more relevant, and so on and so forth. The third thing is, as we succeed, we will make it better for the questions around charities in particular. So the problem that charities have, they are typically worth little economically for financial services. And when you have the regulators having no choice but to put hefty fines, sometimes it's the millions, sometimes it's the billions. We read about it often. Banks getting fined for servicing communities. What that leads banks to do, it increases it increases their sort of processes. It adds friction to registering new businesses, especially charities. And at times you need these banks to basically cut off a whole community, like let's just cut all charities because it's not economically worth it, because we're going to get potentially this fine. Or let's just cut off whole countries. In Eastern Africa, you've got whole countries that are just completely blocked. Now, what that makes it far worse, not only are charities being excluded from financial services at times, but if we take the East African countries example, that strengthens the underground economy and makes it easier for money launderers. So as we make it easier for businesses to verify that individuals and other consumers and business consumers are genuinely who they claim to be and not money launderers, that's going to hopefully not just help these financially regulated businesses be compliant with regulation, but extend their services.
Yeah.
So that's a long way of answering. The question is, as the identity infrastructure improves, it's going to, by definition, help extend access and level the playing field.
Cool. Cool. One more question, if that's possible. We just got it through. Brian D'Souza, thanks for this. What are your thoughts on SSI and thinking about the use of DLT, so particularly permission blockchain? You guys looking at that sort of now in the future, and is that sort of a consideration for your upcoming tech stack?
I think with any area that is broken, as identity infrastructure is, and getting worse, we need to look at innovation holistically and try as many different approaches as we can. So we power and partner with different approaches, including blockchain ones. And there are absolutely not just existing applications that are live and sort of quite successful, but a whole host of others that can be. So very much for that, especially because it's a decentralized approach that empowers a consumer. And that, for me, is a path and a step in the right direction.
Cool. Look, thanks so much for joining, Hussein. Much appreciated. We started on the BCR and ended up talking about blockchain. So there you go. That's the way we go in the breakfast show. Thanks so much. Where can people? I mean, I'm assuming the majority of the people who are listening to this have heard of Onfido, but where can people find out more about yourself or get in touch with you?
I'm on Twitter, as is the company. It's Hussein Kasai or Onfido.
Cool. Thanks very much for joining me, everyone. Join Sam Moule on Monday at 3:30 BST or 10:30 AM ET when he's joined by Sergey Savorostorik. I'm hoping I've got that pronunciation right. Who's the CEO of Tickeron. Otherwise, have a great weekend and thanks very much for joining.